In this video, I'll be talking about plant assets and the asset turnover ratio. We can look at our income statement and we don't see depreciation expense, that is the expense associated with property, plant, and equipment. It's going to be in those selling, general, and administrative expenses. We can see property, plant, and equipment, net on our balance sheet. Net means net of accumulated depreciation. We can go look further in the notes to the financial statements to find the total cost of our assets, the average age, how much accumulated depreciation has been charged, and the depreciation method. Here you can read that Walgreens uses the straight line method. One question we could ask is what percent of the original cost of Walgreens property, plant, and equipment remains to be depreciated as of the company's August 31, 2022 year end, assuming no salvage value. To calculate that, we take the percent of original cost remaining to be depreciated by taking the ratio of the book value to the original cost. So the 11,729 is cost minus accumulated depreciation, or the book value of the assets, and the 24572 is the original cost. So we come out with 48%. So Walgreens assets are about halfway depreciated. Next, we're going to take a look at the asset turnover. Asset turnover measures the company's ability to use its assets effectively and efficiently. We can calculate asset turnover by taking net sales and dividing by the average total asset. We know that net sales is the amount earned from sales of products and services, net of allowances and discounts. We've looked at Walgreens' income statement in the past and seen that they just report net sales under the caption sales. So if we're going to compare net sales to total assets, we know from past experience that when you compare an income statement item to a balance sheet item, you have to take the average of the balance sheet item. Net sales is an income statement item, and it is a period of time concept. Total assets is a balance sheet item, and so we have to take the average of that to convert that point of time concept to a period of time. So essentially what we'll do is take the beginning of the year and the end of the year and divide by 2. The amount of net sales for 2022 is 132,703, and that's going to be the numerator in our calculation. Looking here again at our balance sheet, we can pick up the accounts receivable, net numbers. The ending balance is going to be the number reported for 2022, and the beginning balance is going to be the number that is reported for 2021. To calculate average total assets, we're going to add the total assets reported for 2022 to the number reported for 2021 and divide by 2. When we do that calculation, 90124 plus 81285, we're going to get average total assets of 85,705. And then when we take the sales number, 132,703, and divide it by that average, we are going to get 1.63. So Walgreens has an asset turnover of 1.63. CVS has an asset turnover of 1.4 times. That tells us that Walgreens is managing its assets more efficiently and effectively than CVS. In interpreting an asset turnover, you want to see that number as high as possible.